All right. So now you've learned all the blocks. You've learned support and resistance. You've learned supply and demand. Now we need to focus now on becoming, real traders. We're really ready to enter the market. We've trained our eye to see the right places, to avoid the right places, and to trade the right places. So now I'm going to show you exactly how to trade, how to plan out your entry and what type of entry you should be using. So let's say, for example, we've got a long position here. Or furthermore, let's do it from bias. Let's do it from the sell side liquidity zone. So as me as a trader, my sell side liquidity has been taken. What I would aim for is a strong candle up, and that is giving me the sign I can now get in. Like I said, 10 pips, because after the strong candle now. So what you can aim for is 10 pips, or you can aim for the previous low of the candle. For this example, if I did 10 pips, I would be slightly still worried because the market can reverse on me. So what I'd prefer to do, I would prefer to do 15, 13, 14 pips. 14 pips is safe because if the market comes back here, I know I'm completely wrong, and it's just I wasn't meant to win that trade. And what we're gonna aim for now, guys, is a high, is a previous 15-minute high. So how I want you to plan your exits, you can aim for all the blocks on the 15-minute, or if you're doing quick scalps, aim for a 15-minute high and just ride out to the 15-minute high. And as you can see, for example, aiming for 15-minute high, we have a risk to reward of 2.5. 2.5. So that means we're risking one to make double and a half. So that is exactly all that is with the risk to reward. We're risking, let's say, for example, let me give it in figures, we're risking 100 to make 250. And with that, this is just a 34 pip trade. Simple day. Your day's done. Don't enter normal markets. Don't do nothing else. You're done. You're perfect. You're happy. You've made 30 pips in a day. Some people can't even make 10 pips in a day. And you've risked a minimal amount. And on top of that, the trend was easy. You just rid that upwards. So like I said, what you're aiming for a lot of the time is a 15-minute high. If it's a reversal, you're aiming for the opposite direction. If it's continuation with the trend, you need to find a 15-minute high and aim for that. So now, for example, let me give you another example. These are all buys at the moment. I'll try find a long. For example, now, because I know, like I said in the last video, this high, this rejection zone is a lot higher, and it's tapped this zone a lot higher than the other zones. So than the other taps. So now what I need to do, I'm gonna risk my normal amount. I'm gonna go with 10 pips. I don't need to do a low of the previous candle. And I'm gonna get in. Or what you can do to be safe, wait for your rejection, and then once you got the rejection, you wait for the candle to now pass this entry. So you would put, let's say, a buy stop here. A buy stop here. Wait for the candle to come back up to this zone. You've now been entered. You've left the market. You've put 10 pips, and perfectly, as you can see, 10 pips is still below the previous low. So we're in perfectly. We've got our previous low, and we've got our entry, and we've got 10 pips. All of them combined together makes an easy trade, makes a beautiful trade. 10 pips, you're not risking a lot. And then, like I said, aim for a 15-minute weak high, or even a strong high, depending on what the trend is doing and where the trend is going. So now let's aim for a 15-minute high. What do we have here, guys? We got a risk to reward of 3.7. So now, like I said, this is now basically telling us We're risking £100 to make £370. Beautiful trade, easy trade, beautiful trade. And as you can see, this happens in minutes. This happens within 15, 30, 45 minutes. The trade is done, you're out. You don't need to wait for the extreme high to get out. You don't need to wait for buy side liquidity to get out. You just aim for that high, that 15-minute high that I always mark out, and I'm in and out of the market. And guess how many pips this trade was? This was almost 40 pips. This was 37 pips of a trade. You're happy, you're smiling, you're done. The trade ended within less than an hour. You can go to toilet, come back, and your trade is done. You can go bath, come back, your trade is done. You can go walk your dog, come back, and your trade is done. Because these take profit exits and these stop losses are so perfect. You're basically risking nothing and you're making so much. So now that I've given you two buy examples, I'm going to give you sell examples now. Okay, beautiful. What do we have here, guys? We've got a liquidity zone. So I would avoid trading above. I would avoid trading these. This is consolidation. The market is now consolidating. And remember, if we talked earlier about accumulation, manipulation, distribution, the market's accumulated, manipulated, taken out all the sellers, all the buyers, anyone that is wrong basically, and it's taken out the liquidity here, pushed up. That's literally what manipulation does. It will take out liquidity. So make sure you always look for your liquidity zones. Always. And then that way you can spot your manipulation coming. So like I said, it's pushed up, manipulated, and boom, tapped a perfect level. Tapped it once, tapped it twice, tapped it 3 times, rejected it 3 times. For me, that's a perfect level to trade from. We're gonna sell. You can either use a fib, or you can use or you have the confidence to just get in the trade. Let's say 10 pips, let's say 11, 12 pips. Sometimes you got to extend it a little bit. Like I said earlier, you can aim depending on what you predicted for this trade. I'm just showing you the 15-minute take profits because they are exactly what I want you to be using on a daily basis. Every time you trade, I want you to aim for 15 pips first, and then 15-minute exits first, and then you can extend your trade. So once you get your 15-minute exit, you can now bring your stop loss, bring your stop loss to break even, or you can scale it down all the way to break even. So for example, let's say you've hit this 15-minute take profit. What you can now do is not close the trade, wait for the next candle to be made, and bring your stop loss here. And that's what we will call trading your stop loss. So now you know, perfect. You've got 35 pips. Even if the market comes back against you, you've got 35 pips. But the original trade was 40 pips. So you're not really losing a lot, but you're also saving your money. You can walk away and hopefully come back tomorrow and see that the market is still in your favor. The market is still giving you exactly what you wanted it to give. And that is why I aim for my 15-minute take profit exits, because the market will come back, tap that level, and from there onwards, whether you take all your money, whether you don't take all your money, the market will give you what it needs to give. Also, if you don't want to use a trading stop loss, what you can do is the take profit 1, take profit 2. So let's say, for example, take profit 1. If this is a 40 pip trade, take profit 1 could be 20 pips. Take profit 1, 20 pips. Perfect, right? Take profit 2. The final stage. Well, not the final stage, but the stage that you're really hoping for and that you're aiming for is take profit 2. That's where you will take out most of your money. And then let's say if you've predicted it to carry on running, what you can do now is have a take profit free and have it only at a predicted level. Don't just have a take profit free and expect the market to just carry on running, because that's not trading. That's you now just hoping for the best. We don't hope for the best. We predict and we execute. That is all we do. The market gives us what it gives us, and we execute on what the market is giving us. So now you've got your take profit free at a predicted level, and that's it. You've now got take profit one, you take half your profit. You got take profit two, you take 80% of your profit. And then you trail in with your stop loss. And boom, the market carries on going down to take profit free. You have 20% left in your trade, and let take profit free close all your trades. And that is how we trade. We predict, we execute, we mark out levels that have been already been tested. We mark out levels that are safe to exit at. We mark out levels that are safe to enter at, and we stay safe with our stop loss and with our goals. If we have accurate goals, we can become accurate traders. If we become accurate traders, we can make our dreams accurate and actually achieve the dreams that we want to achieve.